Today, we will talk about XRP and its connection to the IMF, XLM, and even a little R3 Corda, which ties into SWIFT and XDC. Here, we will be concentrating on the eSDR and how Ripple and XRP are so incredibly tied into the IMF. In fact, the IMF in 2023 even called out XRP and XLM as a couple of possible options. Why would the IMF pick Ripple?
There is no financial institution today, there's no company today, with the possible exception of Ripple Labs, that has been required by regulators to monitor and report on suspicious activities that are being conducted on the blockchain. Digital wallets. They can be established on the blockchain by anyone from anywhere. They don't have to be opened through a digital currency exchange. They have global reach once they're opened for instant access to cross-border transfers, and they're easily accessible via the internet.
Competition because it requires capital to get it there. Our view in the future is you don't have to have this pre-funding, and instead you can use a digital asset to have global liquidity on demand. Now, we build upon a tech stack, an open source technology called XRP. XRP originally was built by some engineers who had seen some of the flaws of Bitcoin and the challenges of scalability around Bitcoin. Where Bitcoin today, on a per transaction basis, it's rather slow and rather expensive. XRP is very, very fast, about 1,000 times faster per transaction and 1,000 times cheaper per transaction. The other dynamic, of course, of correspondent banking is some of the more quote-unquote exotic currencies, exotic corridors have been left to kind of stand on their own. And the liquidity in digital assets could be applied to actually make that much more democratized and a level playing field. Ripple's vision from the beginning really has been to apply these technologies in the same way that TCP/IP and HTTP are the technologies underpinning the Internet of Information. These blockchain technologies will be the underpinnings of an Internet of Value, where we have connected devices, we have connected information that will allow payments to flow. And as Norman was describing, if you're a large corporation moving $100 million, that's one thing. If you're a freelancer working in the Philippines doing design work for a company in London and you want to get paid $30 or 30 pesos, Philippine pesos, that's not a transaction that can easily be enabled. And in fact, for the companies that enable that, they require the freelancer to set up an account, and they don't actually pay it out until there's roughly 1,000 USD sitting in that account, and then they would pay it out.
From Polly here, I'm of speculation that XRP was not meant for retail to build on. XLM will handle the retail rails, and the recent integration of Soroban expedites that. DeFi and traditional finance liquidity will move to XLM. And I do have information on here in regards to XLM as well. What is an SDR? The SDR is an international reserve asset created by the IMF to supplement the official reserves of its member countries. The SDR is not a currency. It is a potential claim on the freely usable currencies of IMF members. As such, SDRs can provide a country with liquidity. And if you recall, Ripple talks a lot about IOUs, which is probably coming from a lot of this kind of talk. And here on the IMF site, it explains what an SDR is. It is a basket of 5 currencies, including the US dollar, euro, Chinese renminbi, Japanese yen, and the British pound sterling. Who can hold SDRs? Individuals and private entities cannot hold SDRs, and I'll come back to that here in a bit. IMF members and the IMF itself hold SDRs, and the IMF has the authority to approve other holders, such as central banks. As of 2022, here are the percentages of the 5 currencies in the SDR, and I will discuss how BRICS is impacting the dominance of the USD and what that might mean from here on out. Here is an example of a cross-border payment over a payment network with an eSDR, and that right there doesn't really explain a lot for a lot of people. Fortunately, Dom, who is at Dom's thoughts on here, broke it down a lot. It begins with the initiation of payments. A person in one country wants to send money to another, they begin by sending their national currency to a financial institution, which on that diagram is FI1. For example, they might send 100 units of their currency, which is NCA, here and here. Conversion to XRP. FI1 converts into XRP. The conversion rate depends on the current market value of XRP compared to NCA. XRP as a bridge currency. The XRP are then sent into the payment network, which includes a number of financial institutions. On here, it's 2, 3, 4, and 5. These institutions are interconnected and can facilitate the transfer of XRP. The final financial institution here receives the XRP and converts it into the recipient's currency, which is here. Transaction completion. Payment is completed as the recipient receives funds in their currency, and that process is significantly faster and cheaper than traditional cross-border payment rails because of XRP. And coming back to the problem of the eSDR is that no retailers can have in their possession an SDR or eSDR, which means that at some point, some kind of a buyback, which would look a lot like the US gold confiscation, has to happen. And that corresponds to price talk. It isn't that scary once you understand the underlying mechanisms behind the technology. And here it explains that Ripple does not supplant conventional payment channels such as SWIFT. It connects them. Although Ripple has its own XRP, transactions can be executed in any currency, which then actively integrates into the entire banking industry. And I can't forget XLM. A couple of islands in Iran use it for a CBDC, and the USDC, which natively can run on XLM, is a possible candidate for the US digital dollar. And don't forget Paysend's IMF SDR, called the XDR, is built on what? XLM. An eSDR would be a universal central bank digital currency for cross-border transactions. The eSDR would be a stable instrument with no volatility and would be easiest if issued by the private sector. And that is because the IMF wouldn't want to choose a country's product, because that would introduce a lot of geopolitical tension, which would result in the same kind of an effect that the US petrodollar has had, which has led to the rise of BRICS. And here is an example that is from the IMF, and it talks about the Palau CBDC project, which had a plan to issue sovereign stablecoins in late 2022 on the R3 XRP chain, which once again takes me back to the point that there is publicly available code out there to use XRP in the R3 platform. And why would these central banks and international financial institutions not want to be able to use XRP when they are already so connected to Ripple? And while we're talking about other countries, it's a good time to bring up BRICS and the results of a new economy that doesn't revolve around the USD. So here it shows that the Federal Reserve, Saudi Arabia Monetary Authority, and Ripple collaborated on domestic payments. And in here it calls out the Bank of England as well. Here we are talking about BRICS again, and the very comparable diagrams between a proposed BRICS DLT, which is essentially a BRICS crypto, and cross-border payments with an eSDR. And here's a bit more on the eSDR and BRICS. They have made significant headwind and have created a payment system known as BRICS Pay.
So, we heard during this June BRICS annual summit that President Putin said that they are working on a BRICS digital currency. People are calling it a BRICS coin. Who knows what it will be called at the end of the day, but there are some pundits out there that are calling it BRICS coin. But I have to say that the infrastructure at the moment is not ready for a cross-border currency like euro or a special drawing rights kind of a currency.
And who is connected into Brazil, Russia, India, China, and South Africa, not to mention the major recent addition of Saudi Arabia into BRICS. It is Ripple and their product XRP. And here we have more on the BRICS equivalent of an eSDR, which is called right now the R5 Plus. The original proposal was to create a new reserve currency on a basket of currencies of BRICS countries, comparable to how the SDR is within the IMF. The choice of BRICS currencies was due to the fact that these were among the most liquid currencies among emerging markets. And the R5 came from the first letters of all of the original BRICS currencies. You've got Brazil, Russia, India, China, and South Africa. And now we go into the highly likely possibility of a global financial crisis involving the rapid abandonment of the USD as a key reserve currency. And because of that, the only path is an eSDR.
Collaterals by the shadow banks would be basically under control. So we can have a solution, we have this solution, and CBDC are presently the way to jump due to this big technology, which would allow to fabricate without any cost a new SDR, an eSDR, no cost to bundle, to compose the basket, contrary to the present system, where making a private SDR is costly because the market is underdeveloped. But if we use the DLT tokenization, it's instantaneous, costless, and this could be the basis for making central bankers to jump and to decide to authorize IMF to issue eSDR, and so we'll have a multilateral lender of last resort with the possibility to manage the basis of the global liquidity in a counter-cyclical way.
He called it out as costless. What crypto networks are effectively costless? XRP and XLM. And I didn't say XDC, not because it is not effectively costless, but the consensus mechanisms of XRP and XLM do not involve any third-party payouts to either proof-of-work miners or proof-of-stake stakers. And that will be a key in institutional adoption. Here is Brad himself answering a question about what role XRP and the XRPL can play in alleviating a liquidity crisis. On March 11th, the U.S. Federal Reserve shut down BTFP, which effectively stopped new loans from being issued, which is really the only way that banks are able to profit. And that relates to how much that they have to hold in reserves compared to how much they actually loan out. On March 17th, SEPA goes live, activating cross-border instant payments. And on March 20th, FedNow goes live, activating instant payments. And a lot of things are happening right now that is in line with the information I have received that I am trying to roll out right now.
With Ripple focused on providing on-demand liquidity and the world facing what's probably the biggest liquidity crisis ever, what role do you see XRP and XRP Ledger and similar technologies playing in alleviating such a crisis?
Well, so if you think about like what causes those kinds of crises, one of the dynamics, and by the way, there's lots of inputs into a crisis like that. One of them is friction. One of them is time. If you can reduce friction as measured by time and cost, that's good. That's just a good thing to minimizing, the risks of liquidity issues. Like I don't pretend that XRP is a panacea for all of these issues. What I do believe is if we can successfully integrate into the existing system, we're going to more rapidly bring the benefits of these technologies to a much, much, much broader audience than if we try to circumvent the system. So I've been incredibly pleased by the engagement we've had, ranging from the IMF to, central banks. And look, Ripple's going to continue to work with those players. That's part of why we made the announcements we made this week about expanding, really creating our presence more concretely here in Washington, D.C. And I'm optimistic that if these technologies continue to propagate across correspondent banking, but other industries, that's going to be good for any liquidity crisis.